Hi, everybody. I'm Ginny Erickson.
And I'm Trish Cole. Welcome to Rain Shadow Living, your guide to Port Townsend, Sequim, and the Olympic Peninsula.
Now, if you've watched us before, you know that usually on this show, we focus on what a wonderful place this is to live. And we always interview a local expert telling us how great it is here. We know that. Today, we're going to do something a little bit different. I'm going to interview Trish. She's a local lending expert. And we're going to talk about some ways to take a little bit of stress out of the home buying options and maybe even discuss some options that you've never even heard of.
I'm excited about this, Jenny, because this is what we do every day, in and out. And one of the things I really enjoy about being a mortgage loan officer, and I have been for over 27 years, is problem solving and trying to find solutions for people because not everybody fits in the same box. So I thought it would be fun today if I asked you, what are your biggest challenges today? What are some of the scenarios that you come across? And then I'll try to problem solve them for you.
That sounds great. There are, let's see, several scenarios, but off the top of my head, I can think of four right away. One is what I would call the unprepared buyer. This is the person who doesn't realize that they need to be buttoned up in order to make an offer. The second scenario is a really common one. It is the person who needs to buy, but they need to sell their home before they buy. So that comes up all the time, and it would be great to explore options around that. Another scenario is a lot of times sellers, so like it's an offshoot of the previous scenario. You have to sell your home in order to buy. You want to sell your home and get the highest dollar possible. And the home you're selling needs work, and you don't have the cash to do it.
Mhm.
So that's kind of related to I have to sell before I buy, but it is certainly something that definitely causes a lot of homeowners stress. And then the last scenario I'd love to talk about has to do with something that impacts us here in the area. We see so many retirees coming here, and a lot of times these people have fantastic credit, an amazing number of assets, but they don't have a lot of income. Some of them just live humbly on Social Security, but they have tons of assets. They have fabulous credit. How do they buy? So those are probably the four scenarios I'd like to go over. How does that sound?
That sounds great. And they're all really intriguing scenarios that we run across in this area, particularly, but just in general for home buyers. And once again, not everybody fits in the same box, and not everybody's a first-time home buyer. Sometimes this is the last home they're going to be looking at purchasing. So maybe they've lived in their home for 30 years, and the idea of packing up a home that you've lived in for 30 years, going through everything, trying to decide what to keep and what not, and then buying another home and doing it at the same time, it can be overwhelming, as you can imagine, even if it were just your second home, but particularly if you've lived in a home for a great deal of time. And I can actually personalize with that because I recently did the same thing. After 27 years in the same home, we built home and moved, and it was very overwhelming at times.
I can relate
So,
to. I just sold my house, my Seattle house in June. And yes,
okay.
you have nailed it. And I think that part of my role as a realtor is to certainly help people through that. I can help them understand where to invest their time and money. I can help them, if they're local here, I can help them find resources to clean up and get ready. So, yes, if you're
That's
listening, we're
important.
here to help.
Right,
Yeah.
exactly. So that first question you had about people who aren't really prepared, you might have someone and they have excellent credit, they have excellent assets. This is the 15th house that they've bought in their life. And they think, well, um, why do I need to go see a lender? I mean, I could pretty much buy this house with cash. Somebody's just going to give me a loan, no problem. And so you might speak to that from the real estate point of view, that there's actually timing issues around that. But as a lender, what I say is, why not explore all the options that are out there for you? Particularly if you manage wealth and if this is not your first home, or maybe you have multiple properties, there might be better ways to leverage your money. And sometimes there are creative ways to explore financing that you may not have thought about because that's not what you do every day. So it's
And I
always
also
great.
want to jump in here and say a lot of these folks in that scenario that you talk about, the person nearing retirement has lots of assets, they often lean very heavily on their financial advisors. And I would just like to remind everybody, financial advisors often recommend products that are in the stock market. And they may or may not encourage you to move your money into real estate. I think it's really wise to get opinions from multiple people in the financial services industry, including the mortgage broker. And then you could bring the mortgage broker's package options to the financial advisor. And then the financial advisor can compare in, I think, a more fair and realistic way. So I'm a huge advocate. It's one of the first things I ask people when I meet them. I say, you know, are you getting a loan or are you paying cash? If you're paying cash, are you prepared to provide proof of funds? If you're getting a loan, do you know who you're working with? Have you discussed it? And if they haven't, then I refer them to the loan officer. But a really, really common scenario is this. It's amazing. They know they're going to move. And so they look online and they find the house of their dreams. And then, because I have podcasts, because I'm online, they call me and they want to come and see the house of their dreams. So, of course, I show it to them. And now, it's a full on romance. They're ready to write an offer. And of course, I'm not I'm not a financial services advisor. And so they may be reluctant to talk about it with me. And they just met me and they don't know me. So then when I bring up, are you getting a loan? Have you spoken with your loan officer? I get this blank stare. And then they say, well, we'll make an offer and then we'll get to it. And that's not how it works in Washington state. And so I feel so bad for people in that situation because the way the contracts work, you have to say what kind of loan you're getting, how much money you're putting down, and when you're going to close. All of that is in the contract. And you have 5 days to apply for that loan. So 5 days enough time to shop around and find the best option for you?
I would say that it would put a lot of stress on someone. But the good news is for me to sit down with someone and strategize with them on what the best options are for them, and give them time to maybe talk to someone else or talk to their financial advisor. We pull a soft credit report now. It's not a hard credit report, so it doesn't have any impact on your credit whatsoever. So it doesn't harm you to talk to different people. Once again, like I said, there's so many options available. And here at New American Funding, we have our own portfolio products that many banks don't offer. So you might be looking at one bank that you found online or wherever, maybe your local bank that you bank with, but it doesn't hurt to talk to another lender and get a second opinion and look at some different options because
I'm
particularly if you're trying to look at an investment or you want to strategize wealth building, it's a really good idea to get different opinions. And that way you can make an educated decision moving forward. And it's better to do it before you find that great house that you want to buy tomorrow. So you're not stressed out over it. Because it
exactly.
could take time depending on what we're looking at as far as, are we doing a bank statement loan? Are we doing it? There's different types of loans available. Self-employed borrower, maybe you have 5 different properties. All of this plays a role in it. So the more complicated, it could take a little bit more time. Even first-time home buyers, there's so many options available that it's always good to look at the different options. And maybe it might, I might be able to bring up some things that would help you get a better rate. Like if you had a grandmother or someone who wanted to gift you the down payment instead of doing a first-time home buyer loan that might have a little higher interest rate. So there's a
Yeah.
lot of options out there. That's what I'm here for, is to sift through it and help give you the options and the pros and cons and let you make an educated decision.
Yeah, and this is all really important. I think people in general are a little reluctant to reveal finances. I'm so glad you touched on the fact that it doesn't impact your credit. I think there is an impression out there that if I shop for a loan, I'm going to ruin my credit because everyone's going to be checking my credit
Mhm.
report. So I'm really glad you touched on that. In terms of a gift for a down payment, that needs to be disclosed in a contract as well. So when your realtor is asking you financial questions, it's because it's in the contract. And the contracts are built so that they protect both the buyer and the seller. So you'll get a really smooth deal. But so I'd just love to sort of ease the fear around getting ahead of it and planning ahead. Because I think, yeah, if it's not going to wreck your credit report and it's just going to take stress out of the process, go for it.
Right. And maybe you find a loan that makes a lot more sense for you.
Yeah.
So, yeah. And I guess that gets to the next
Yeah. So the
question you
next
had,
one
or the next
is, yeah,
scenario
the
you came
person
up
who
with.
has to sell. So the next scenario is the person who has to sell in order to buy.
Right.
That's phenomenally common, especially in markets like ours. In Uptown, still, we need cash offers. Sometimes we're still seeing competitive offers, even in the slower market. So when you're in that situation and you have to bid competitively, offer cash, can a lender help?
Most definitely. I know at New American Funding, we have several, once again, several of our own products to help resolve this issue because it is so commonplace today. People have stayed in their homes, for years, built up equity, and once again, they may own their property free and clear and think, well, I can pay cash for that other property. But how do you make that happen? Unless you're willing to try to make an offer that's contingent, meaning you have to sell your property and close on the other loan at the same time, then you may not have the option to do that. A lot of sellers, and I can't speak for that because that's your
Yeah, I'll speak.
arena other than what I've heard from people, but oftentimes they won't want to take a contingent offer because if there's someone that comes along that can make that happen sooner, they'd rather do that. So we have an option that's called NAF cash, NAF being New American Funding, the acronym. And what it is New American actually buys that home that the party's interested in, your buyer, and we make a cash offer on that property. So you would go in and make a cash offer as their agent. And then they move into the home and they actually rent that property back from us until they sell their property. And it's great because they don't have to make a rental payment for the first 60 days. It's just accrued daily and it's added on to the amount that they owe back. So you're living in the home that you want and you have the ease of being able to sell your property. Now, if it goes over 60 days, we still have options to continue to rent, but the idea is to price the exiting property reasonably so it gets sold quickly. And the good news is you don't have to qualify for you would qualify for the loan just so that we know that you qualify for it. Um, but you're making a cash offer on that house. So for
Yes.
the person who's been in a home and they come to you with a list a mile long of this is exactly what I want and I don't want anything but this, and that home may come on the market once a year, twice a year maybe, you don't want them to miss out on it. So that's an
Exactly.
option. We get them pre-approved for the NAF cash. We get them pre-approved for a loan. They don't have to use it. It's just there so that you can make that cash offer if you want to. And then if they sell their home, they can cash us out afterwards. They buy the house back from us.
So the big question everyone's going to have is how does that compare with a bridge loan, or how much more expensive is it renting across town, or how much more expensive is it than a traditional loan, right? Yeah, I assume that the rates for Nash Cap. So can
Well,
you get,
it's a
and
fee.
I know rates change, so I'm not trying to pin you down, but maybe there's a percentage of how much higher or how it would be good for a buyer to think about that.
Right. So what I usually do is I give them options. And it's always going to be on your comfort level and how quickly you want to move. So the hope is that if you're making a cash offer on a home, that you might be able to get a little bit of a discount from the seller because there's no appraisal involved. It's a quick transaction. So if you can make, hey, I can buy this house for cash. So maybe you make that price offer a little bit lower to compensate for the cost of using our NAV cash. There is an upfront cost for that, and it's a percentage. And it depends on whether you're cashing out afterwards or you're going to be having an underlying loan. Um, and then I would compare it to a bridge loan. And a bridge loan, basically, you are borrowing the money that you're putting down on the new home, and you only have to qualify for the new home price and then taxes and insurance on the exiting home. You don't have to qualify for the bridge loan in your debt to income ratio or your principal and interest on the home you're exiting. So it solves that debt to income ratio problem that someone might have if they're trying to qualify for their own home and the new home and not have funds in between. So for the bridge loan, there's the cost of that down payment loan, and it goes up to 12 months. And once again, you would hope it wouldn't take 12 months, but I can compare those prices side by side for someone. And another alternative is we have what's called a NAF portfolio loan. And that's where you take a home equity line of credit off your current property for the down payment, and you'd use that. And we would not include the exiting property or the home equity line of credit in the debt to income ratio. So there's a couple of different ways that we would look at it, and I would compare the pricing side by side so someone could make that decision.
Yeah, so that takes time. And again, something you'd want to have done before you're in that situation to make that offer. I
Right.
also want to talk a little bit about when you make a contingent offer, you have to have your house on the market within 5 days of mutual acceptance. So if you're not ready to sell your house at that moment, then it's really hard to get your house on the market in 5 days, as we've just discussed a little bit. The
Right.
second thing that happens is you put your house on the market, you have 45 days to get a close. If you don't have an offer in that 45 days, if you don't close in the 45 days, pretty much you can be bumped. Another buyer can come in and buy that property out from under you during that time that it is contingent. Once your property has been through inspection, then it's pending. It's a little bit different. But if if your house is not already on the market, if your house is not likely to sell within 45 days, I would encourage people to look for other alternatives for sure.
Yeah. And there are some guidelines, like with the NAF cash, you do have to put your home on the market. Um, you don't have to have an appraisal on the property you're buying. We do what's called an automated appraisal on our end. Um, a home inspection you do have to have. So there's a little bit of a timeline, but really it's a quick closing. And the idea is you get your home on the market within a certain amount of time. But if you're closing on this new property quickly because it's a cash offer, hopefully you can move your furniture and everything else out of that home you're exiting in a
Nice.
timely manner and have time to do what you need to do to stage your home or make it prepared for a listing so you get the ultimate price for it.
And that would be so much more, that's so much less stressful than
Yeah.
having to do it all at the same time.
Yeah.
In the next scenario that we talked about was the unexpected expenses and getting ready for sale. So I had an example of a lovely couple. They were getting their house ready for sale, and there was an unexpected forest fire that breached their property, burned their fence, melted their siding, did interior damage as well. And they had a big, a lot of it ended up being covered by insurance, but they were trying to get their house on the market so that they could sell it quickly and move. And so I think that it does come up, not even a disaster like that. A lot of times you go into a house. I had one the other day. The carpeting was not only filthy, but all ripped up. The flooring, they'd had animals, the flooring, it was beautiful oak flooring. So for really a small amount of money in that case, you could have, I think it was about $8,000 to do all the flooring throughout. Now, this gentleman, $8,000 was tough for his bank. So is there anything that can help a person like that? Because by redoing those floors, I believe he got back about $20,000 in purchase price. So it's definitely well worth doing if the person can get the funds. So can a lender help?
Yeah, and I've actually had clients that are they were in a situation where what we were talking about earlier, where they wanted to buy and they had a home that they wanted to sell, but they wanted to move out and then do repairs as well. And
Mm.
so because they knew that they needed certain things done in order to sell their home, they knew that they needed new carpeting and things like that. So what we did was we put a home equity line of credit in place. And that way, even if you don't have an exact figure in mind, if you haven't had a contractor come in and say it's going to cost X or whatever, you can put that home equity line of credit in place and then you can use it up to however much you need to cover expenses. The fire might be a little bit different because it sounds like it caused a lot of damage. But for things that most home sellers need to take care of, whether it's cosmetic or the big ticket items like a roof
Painting is typical.
and
Yeah.
painting, yeah, those things they might want to get a quote ahead of time. But typically, if there's enough room in there, home equity line of credit makes sense.
And if
That's
you
the
were,
easiest.
do you see it often if they did do a home equity line of credit to fix up the house they're selling? Does that impact what they're able to borrow for the home they're buying?
It can. Yeah. And that's why it's one of those strategic moves we have to look at because once again, I keep saying debt to income ratio. And what the debt to income ratio is what the new house expense is and what your current liabilities are, and whether or not we have to count that exiting home or a home equity line of credit and how that impacts. You can only go to certain percentages depending on the loan program.
Mhm.
So we want to make sure that we're keeping you within a ratio that you want to still be able to qualify for the type of home you want and be able to do the things you need to do. So once again, we might want to look at one of our portfolio products that allows you to buy that home, gets the home equity line of credit in place, and we don't count that in your debt to income ratio, and we don't count the exiting property. So I weigh all those options for you and look at the cost to do each of them. Yeah, so I think that's probably though what I would recommend for most people. And depending on what the other end of your goal is, how
Mhm.
it all fits together.
Okay, and that brings us to scenario number 4. And again, I do see this quite often. So this is, I say a retired person, but really it could be anyone. This is someone with multiple assets, high net worth, and limited income. Maybe it's a tech expert, someone who just took early retirement and is vacationing for a year, but wants to live in a dream place. They have a lot of net worth, a lot of assets, and low income. Is there something? Can they buy?
Yes, there are a couple of solutions for that and that I've actually used. And once again, I have experience as a financial advisor in my background, but I
Mm.
don't practice being a financial advisor because I'm no longer licensed. So I always recommend that people run the scenarios by your financial advisor if you're using assets. But one of the things that I've been able to do that has been strategically really a good plan for people that have a lot of assets but not a lot of income coming in, so they can't show the bank that they can afford this mortgage payment, is we do what's called, we turn on a stream of income. So the stream of income would be enough to afford the new home that they're buying and the home that they're exiting. And even if you own your home free and clear, there's still cost because you have to pay property taxes and you have to pay insurance. So we have to count that debt as part of your debt to income ratio. So we want to make sure that you have enough income to cover all of that. And that also might include your down payment, depending on whether you want to take cash versus doing something like a home equity line of credit off the home you're exiting. So we'll look at the cost of that as well. The only condition is whatever stream of income we turn on needs to be available for 3 years. So I have to calculate to make sure that that works. But that's been a real effective way to afford both homes. And then once you sell your other home, you can always readjust your income moving forward. The bank just wants to make sure that you have income in place now and that there's 3 years continuance when we underwrite your loan.
So, so I have
Oh,
another
sorry.
question. So being a realtor, I am a self-employed person, and I have chatted with many of the self-employed realtors in my office. And I think in Port Townsend, I read a statistic that we have more self-employed and entrepreneurial people here than 98% of the rest of the country. So yeah, it is a really, and more people who work from home too. Even before COVID, it was a common thing around here. So for that entrepreneurial individual, I know it has been an ongoing pain point for them to buy property. Have things changed over the decades? And what would you say to that entrepreneurial person who goes, oh, I'm self-employed, I can't get a loan? What would you say to that person?
Call Trish Cole at New American Funding.
So there are possibilities.
So it once again, it depends on the bank. When you go into your bank, we have what are called non-qualified loans. Basically, it just means that they're not your streamlined loans that go through Freddie Mac, Fannie Mae, VA, FHA. So we provide all those loans at New American Funding, but in addition to that, we have different companies that we broker to, and then we have portfolio loans that we create ourselves within the company. And one of those is specifically geared towards self-employed borrowers who maybe your income, your net income after all your write-offs doesn't quite match up to what you know your real income should be on paper. So we have bank statement programs and things like that to provide loans for people that can't show on paper how much they actually make. And we also have loans that are based on if you own multiple properties, the rental income off of those properties, what they generate as a way of showing income rather than putting it all on tax returns and things like that. So it's just different ways of looking at it for different types of people. Once again, because there's never the same loan for everybody. So yeah, and one of the things I forgot to mention when you were talking about people that may not have the income, or they might be on a fixed income, but they own a home and they want to buy another home, is the reverse mortgage. And there is a reverse mortgage purchase. The beauty of this loan is that if you have enough equity in the home that you're exiting and can put it down on the new home that you're buying, you actually may not even have a mortgage payment in the time that you're living in there. So it still means you have a loan on the home you're purchasing, but if you have like at least 50% equity in the home that you're exiting, you could potentially be qualified for a reverse mortgage. It is age restrictive. You have to be 62 or older. And one of the benefits of aging is the more years you put on, the better, the least amount of equity that you have to put down. So it's a great program for people that they have an asset like a home that they've invested in for a great period of time and want to buy that, maybe their last home or that home with the view or whatever it is they're looking for.
They're downsizing, yeah.
Yeah. Or maybe they want a one-level home or whatever it is that is motivating them to get out there and look again, but not have a mortgage payment. So it's a great
That's
solution.
pretty wonderful. Now, reverse mortgages for decades had a horrible reputation. And I think for a lot of people in that senior age group, they want to leave a legacy. And it's my understanding, or it's at least the reputation, that if you got a reverse mortgage, you would not have anything to leave. Do you know, has that been changed or straightened out? I've heard that the new products are much fairer and different than the old products that gave it a bad reputation.
So the reverse mortgages are the most regulated mortgage that's out there today. And in fact, we have a specialized division in our company that handles reverse mortgages, and they're all certified to do so and certified to go to like a group setting and talk about it. And you're right, at one time there was such a negative representation of it. You have to leave a certain amount of equity in your home. So if you're thinking that your only asset that you're handing down to your next generation is your home and the equity that you're building in it, this might not be the right product for you. But you do still leave some equity in the home. It's just maybe not the amount as though you were paying for 30 years or 20 years over a
Right.
period of time and
But
paying
it's
off.
more fair and it's more fairly regulated than the
Yes,
previous
definitely.
reputation around it.
Yes.
And
It's
so,
highly regulated. Yes.
yeah, so if you're thinking about that, I mean, I love the scenario you laid out. You're a person, you have a lot of equity in your home. You want to move to a new area, a new climate. You want to come to sunny Sequim or wonderful Port Townsend. You could do that and get a reverse mortgage, especially if you were moving to a smaller home or a lower price point. How wonderful, and what if you didn't have any offspring? How wonderful would it be to live
Mhm.
mortgage free? That'd be amazing, right?
Right, right. Or, your kids say, "Hey, put everything in your house. We don't want anything. We just want you
Yes,
to be happy and we want you to be able to afford to live in today's
yes.
economy." Every time the grocery bill goes up another $10. So,
I know.
yeah, I mean, it's a good option for people that are on a fixed income and really looking, they want the security of knowing that they'll have their home. There's still going to be some equity in it, but they don't have to make that mortgage payment every month.
Wonderful.
Yeah.
Anything else you want to add or bring up? Because I think we're getting near time, but I just want to make sure this has been quite engaging, I think.
Yeah. And I just know that you and I have partnered up because we have a real passion for helping people. And really, it's not always about just get the transaction done. What it is about for me, and I'm sure for you as well, is strategizing with people to really benefit them. We love this area we live in. We talk about this area. Our podcast is about this area, but it's also the pleasure of doing what I've done for as long as I have is being able to really help people and
Yeah.
fit them with the products that match their goals. And it isn't, I get a lot of questions where people want to, maybe one of the first questions is, what's the interest rate?
Always.
Well, which loan fits you best?
Yes.
That would be my question to them. I can throw interest rates out there all day long. I know that we just like most banks try to stay as competitive as possible to earn your business. But sometimes what you really need is someone who's going to take the time to dig deep and really find the best products that match your family's needs, not just here's the two loans we have. So that's why I'm with New American Funding.
Nice. And if I could say one last thing, it's to everybody. If you meet with a realtor and the realtor asks you a financial question, they're not being nosy. We're not being nosy. We want to set you up for success so that when you do fall in love with that beautiful home, you're in that perfect position to take full advantage of it. So I always say, the first step is to find a local lender. And if you don't have a local lender, go ahead, ask your realtor to provide one for you. We all have lists of wonderful people. And of course, Trish is at the top of my list, but yes, so don't be afraid to talk about your financial situation. Don't be afraid to address it up front. It's not going to hurt your credit report to find out. And yeah, get buttoned up before you fall in love with that perfect home, because yeah, that'll just increase your chances of getting what you want.
Right. And we as a lender, we protect all your information entirely. We have a fiduciary responsibility to make sure that your information is private. So I would never discuss anyone's private financial credit, anything like that, with a real estate professional,
Yeah.
even if, unless you gave me written expressed permission that I can talk about things. But even then, I'm hesitant because I want to just make sure that everything that you discuss with me as far as anything to do with your finances is strictly confidential. So,
And the only reason I would ask questions is so that I can set you up for success with the contract. So I just
right.
really need to know the terms. And so my first question is always, is this cash or is this a loan? If it's a loan, do you have a lender? And I'm just, as a realtor, I'm just trying to prompt you to get the terms that we need in the contract. I don't really need to know other things. I just need, what do you qualify for? Is this home within what you qualify for? If it's not, but you love this home, go back to your lender. Let's find out if you qualify for it. So I don't really need to know your financial situation. I just need to know the terms of the offer. And so I'm not asking to be nosy. I'm asking to set you up for success.
Exactly. Yeah. And sometimes it does seem like we're asking you a million questions, but it's all so that we can sift through all the products and offer the best one for you.
And I should add too, realtors in Washington are licensed brokers. And as a licensed broker, you are a fiduciary. So if I'm bound to, what's the word? Confidentiality. So obviously I would just never do anything, just so it's very important to us to respect you and our conversations will remain private should anything. Well, Trish, thank you so much. I definitely learned a ton. I really love that NAF cash option. I honestly believe that people who have to sell before they buy, when you're in that situation, it causes so much stress. And the idea of renting the new house and having that time to move gracefully just feels like a big, And then the other thing that I learned and that I would say to everyone out there is no matter what situation you are in, there's a solution out there. So reach out to a financial professional and see. And of course, feel free to reach out to Trish or call me. We'll set you up with someone who can help you out.
Yep, I agree. And there's a lot of solutions today that maybe we didn't have 5 years ago, 2 years ago even. So just reach out anytime, whether it's your local bank or we'd love to help you as well. And stay tuned. Yeah, stay tuned next month. November 7th is our next month's podcast. We've got some exciting stuff coming down the pike. And don't forget to leave us your comments. We'd love to hear from you and we'd love to comment back. So thank you for joining us in Rain Shadow Living. We'll see you next time.